Righty-ho, folks, welcome to Trading Nut and this little clip from a live stream we shot last week where Lewis Kelly breaks down multi-dimensional time frame analysis. I don't know if that's what you call it, but he breaks down high time frames to lower time frames, how market structure works within that, and order blocks as well. So you're going to get to see the snippet from the live stream that he shot last week right here and now. It's going to take about 10 minutes to get through. Now, if you do want to find out more detail about this, click the link below the video and you'll see the full live stream on that page, and you'll find out how you put this into practice. All right, folks, let's get on with it.
The price is just what price is, but the time frames we use are what we perceive price to be. That's why I say that market structure is multi-dimensional. Let me show you an example of that. Let's just pull out this market structure right here, and we're going to put that market structure right there in blue, right? So essentially, I want you guys to know that the blue here equals 4 hour. Right? So this blue equals the 4 hour time frame. So I think you guys now looking at this, if you just know basic market structure, you know, we have a swing low, a swing high, a new swing low, a new swing high, and then expecting some sort of new swing low at some other point. So what's happening is very simple. Our swing points are increasing, which is bullish order flow, right? I call it order flow because I use essentially 2, sometimes 3 different types of structure, which I'm going to elaborate on soon, right? So this is what we call order flow, which is the 4 hour external swing points of market structure. Again, I will go deep into detail about that in a moment. So we can see that we have bullish 4 hour order flow, right? But then let's say we perceive this same piece of price action, but now we perceive it on a 15-minute. So that 15-minute is going to look, the 15-minute time frame is literally just going to look like this, right? The black. So now let's say that the black represents the 15-minute, right? So the black represents the 15-minute, the blue represents the 4 hour. Okay, so we know then that the order flow, which again is the external swing points of market structure on the 4 hour time frame, is bullish. So that's one perception of market structure. It's order flow, which is the external 4 hour, which we just spoke about. It's bullish, right? Okay, so we have a 4 hour, which is bullish. Then we have a 15-minute. So now what you need to do is establish those same swing points on a 15-minute time frame. And for this, of course, I'm going to use the black highlighter. So let's mark out our swing highs and swing lows of the 15-minute. We're going to take our swing low right here, swing high, swing low. Now we have higher high. So the moment that price makes a higher high, we know now that the price action on the 15-minute is bullish because price just made a higher high. Agreed? Great. Why? Because this is obviously a break of structure. Price is putting a new high. So right now, price is bullish. As we put in higher highs, higher lows, price is bullish. Again, higher low, higher high, higher low, higher high, lower low. Now, at the minute that we create a new low that is lower than the previous low, this is, of course, a break of structure. At this point, the 15-minute time frame shifts from bullish, making higher highs and higher lows, to bearish, making lower lows and lower highs. So at this point in time, we're perceiving the 15-minute time frame to be bearish. So you can see right now how we have 2 different time frames and both tell a different story. Now, here's what's key, right? Price then reshifts again. I want to give you guys some context. If the order flow is bullish, meaning if the higher time frame is making higher highs and higher lows, when the internal time frame, the 15 minutes, the internal structure, the trend is what I call it, shifts and has a lower low, that is known as a pullback confirmation. We now know that the 4 hour is now pulling back to put in its higher low, right? Which is this low down here. That then gets once again realigned when the internal 15-minute shifts bullish again. So the moment that the internal then shifts bullish again is our confirmation. The 4 hour is now going to put in a new higher high. Very, very simple stuff. So we follow the 15-minute again. We say higher high, higher low, higher high, higher low, higher high, lower low. So what is that? We just spoke about it, right? It's a confirmation that price is pulling back. So now we are expecting, which is called expectational order flow. We're expecting price to come somewhere above this low and take out this high, because that is the expectational order flow. All we are expecting is bullish price action. So that is how we build essentially a bias, because that's how we predict market structure and know how to read market structure. Again, I will show you this in the live market so you guys understand what it is that I'm really saying. That's essentially market structure from a multi-dimensional perspective. Now, after market structure is supply and demand, right? Or some of you guys might have heard of it as order block. Now, the concept of an order block is pretty simple. It's an area of price where extreme volume comes into the market that is unmitigated. It leaves behind imbalance that shows unmitigation. So what we have right here is this box right here, essentially where volume comes into the market that pushes price down, right? Very simple. This is area of the market where supply orders, sell orders, came into the market. It came in with such an aggression that it actually left behind imbalance. Imbalance or inefficiency, if you guys haven't known already, it's essentially the wick of the first, which is here, and the wick of the third, which is here, do not touch. So we have a space in the middle, an empty gap, which is called imbalance. Imbalance, essentially, the rule of imbalances is that price will always fill the imbalance. If you actually just go ahead and look at all previous price action, you will obviously realize that at some point or another, all of that imbalance was filled. So take the example right here, right, where we have this push up and then the extreme momentum comes in. Now we know that the first candle and the third candle don't meet and it leaves a gap, but don't worry, because at some point in the future, that gap gets mitigated and so does our supply zone, right, which is our order block. That is the very simple way to look at an order block, right? So this right here is essentially an order block. Now at all times, of course, as we can see right now, demand comes into the 4-hour time frame here. So let's imagine that there is an order block right here. Now what our job is to expect price to come into this area, this order block, and when price comes into that order block and gives us a realignment. A realignment, as we of course just spoke about, when the internal 15 realigns with the external 4-hour, that is the value, right? That is a point where you're going to take a trade. And that trade is going to be like this. That 15-minute that just had the internal break of structure is going to leave behind a demand zone. That demand zone is then going to theoretically be filled by the M15. And then you're going to expect price then to go and take out the new swing high. So essentially you place your long position on here with your stop loss just below the low. And then you target the weak high, right? And that is essentially in a very, very, well, not very, very simplified, but in a much simplified fashion, that is the concept that we trade.
Hey folks, ever wonder what broker I use? Well, I use Hanko Trade. It was a no-brainer because I was looking for a broker with good trading conditions and one that wouldn't restrict my leverage. Now, by joining Hanko Trade, I've also cut down my trading costs significantly with their super low commission of just $1 per 100K. You can learn more at hankotrade.com or just click the link I've put in the description. Hey, you watched to the end. Brilliant. Well, because you did, I'm going to share with you something that everyone else is going to miss. Now, if you jump into the live stream that Lewis did and jump to 30 minutes in the video, around about 30 minutes, you're going to find out the rest of the piece of the puzzle for this, or how the banks trade. So please link below the video to that. Go and check it out. Also, whilst you're there, hit subscribe, hit like, click on that notifications bell, click all, and we'll see you in the next one.